Will the markets go up? Will the markets go down? I don't know. Hey, how's it, guys? How's it, Shane? Good to have you guys on board. Ladies and gentlemen, it's the live show with Rob. It's Thursday. Don't forget, trading is risky. You guys need to read this. Most traders lose money, and if you're unsure, you probably shouldn't even be trading. Yeah, let me take that out the way, because the last time, or whatever, I left it in the way, didn't I? What do we got here? Let me move things out the way so we can get down to the... I guess that would be this one. Move my mug out of the way so that we can actually start looking at some charts and stuff. How's your trading week been, guys? How's it going? How's it, Brewman? Good to see you. Where's BTC going? Is it going up? Is it going down? Hello, Blue Mango. Good to see you as well. Seems we're on board. Got a few people here. Today, I want to actually talk a little bit about, finding a high probability setup. I had one or two questions on how do you find a high probability setup? Oh, man, so many things to look at. So we'll have a look at those things and we'll get to it. Let me just move this thing as far out of the way as possible. I think we'll use these charts today. I've got the other ones up, but these are easier for people to see, it would appear. I've had a few questions on that scenario. Yeah, I was looking at Bitcoin earlier and I was thinking, it looks like it might drop. Yeah, it does, eh? I was looking at this scenario where it's got this sort of trend resistance on the top of it here, and it seems to have run into a sort of a range. There's nothing wrong with the range because you can trade a range quite well, but this range seems to be quite tight, sort of between 115, 116 and 120. It's really tight, and it's sitting in the middle at the moment. Look at these tails, the buyers getting back in, the sellers at the top. There's a long tails, which means people are not really that confident or that comfortable trading with BTC at the moment. Hey, Kevin, good to see you, man. I haven't seen you for a while. Welcome back. Good to have you on board. Yeah, that's interesting. So I got rather upset with this trade, the gold trade. I've traded out of it because it broke below that support now. And I tell you what, last night I wasn't looking. I mean, it was out of my time zone. Gold shot up. It was like a millimeter away from the target, and it obviously came down. When I got up this morning, it was down here. So that's a missed opportunity. That's one problem you have in trading, is the time zones. When you're out of time zone, you've left a target in place, and it just misses it. It's insane. It's crazy. But anyway, oh well, tiny profit. It's not the profit I wanted. We wanted a decent profit on it, and we end up with like $70 or something like that just to get out of the trade. S&P 500 is on the move. It's on the upward trajectory. Hopefully it doesn't do the same thing to us that the gold did. You see, even after 33 years, I still get emotional. I get upset with trades because, I feel like the world's conspiring against me sometimes. And everybody feels that way as a trader. Okay, so here is the US dollar South African rand, the trade that I'm married to, the trade that I just can't get away from, because my brain can't tell me why the rand is holding up so well. It doesn't make sense to me. But here we go. It's going up again. It's hit the support. It's broken to the upside. It's broken through the structure. So let's see if it can get up to a decent level again. I'm actually so surprised that the dollar rand is holding on so well. Euro United States dollar, profit taken. That one gave us a profit, but I don't think I had it on this account. It was on the other account, but we took a profit there. That's fine. It looked great, but it's still going up actually. So yeah, that's fine. It is one of what it is. The DAX, I remember Shane telling us to go short on Tuesday. Look, it's gone long. Turned around and went long. Okay, so there we go. It broke back up through the level and decided to go up. But when it hit this resistance level here, or this high, or this area, it kind of broke back down again. So what I wait for now is for it to break back past that prior high, and then I'll get a long trade on it. I don't think I'm going to take too many short trades in this market, because it's all looking very ominous at the moment. Looks like everything wants to go pretty long. Okay, we'll have a look at the news as well. Boom, 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 boom. Yeah, someone went short on gold, Shane. Yeah, you went short on gold. I was long and we were doing well. And like I say, we almost took full profit. And then I wasn't looking. I get up this morning and it's turned around. I actually took a loss on silver on my main account. I took a long trade on it. I never trade silver. I took a long trade on it and got wiped out in one day. Imagine that. Okay. But I'm going to go into detail today on finding a high probability setup for those guys who need to know. I'm just waiting for everybody to get on board. Once everybody's here, we'll go and have a look, and we'll go and take a look at how to pick a high probability setup, what's the best way to do it. And you know, you've got all these trades. You've got all these trades to look at, and you know, what do you do? How do you pick your setups? And it's actually really easy. You don't need to have a million lines on the chart. You don't need to go through the whole process, but I'll explain all that to you in a moment. Shall we go and take a quick look at the news? I think it's this one. And let's just go and see what we've got on the cards for today. And obviously, who else but in the news but this dude? He's always in the news. Trump signals baseline hike. Let's just see if the news has changed somewhat since I last looked. Looking for any big things that are happening. Do the opposite to Shane. Yeah, we always do the opposite to Shane. Ah, look, we got rid of his face. We changed it with a forklift. Put him over there. That's fine. It's still Trump to visit Fed HQ for refurb check as he battles with Powell. Okay, AI chips. Google beats on earnings, which is good. You know, earnings make a big difference to the markets. You've got to keep an eye on earnings, because if the companies are doing good with earnings, then everything's doing good with earnings. China releases draft law amendment to help curb price wars. Aircraft maker tops profit estimates. I think the aircraft are coming back, eh? The airlines and aircraft, they're sort of coming back into fruition. They're starting to do better again. And as long as all these companies are starting to do better, and as long as all these companies are starting to pick up and their earnings are starting to do well, the S&P is going to go up and the markets are going to go up. Not in a straight line, but in general, they will start to go up again and get back to the areas that we expect. And that's what we look for. You just had your first ad. Do you know why you had your first ad for solar panels, Kevin? Is because I'm always thinking of solar panels. Most likely. But we haven't had load shedding in like a year here. I don't know if you guys know what load shedding is, but in South Africa, we have a thing called load shedding, which is why I'm so short on the South African rand, because, you know, the economy here is so messed up. Because we used to provide the whole of Africa with power. I mean, Eskom is our power provider, and they provided most of Africa with power. That's how much power we had. And now it's so badly messed that we can't even provide South Africa with enough power. But it would appear that a lot of it had to do with corruption and crime and theft and whatnot, because suddenly, for the last year, after a number of threats and changes from the president, we've had power. And we haven't really had much load shedding or much. Load shedding is when they switch your power off for a couple of hours, and then, you know, different areas get switched off for a couple of hours and they put it back on. And depending how severe it is, depends on whether it's 2 hours, 4 hours, or 6 hours, or whatever the case. So everybody has these backup systems in their houses and what have you, and, you know, running on solar and all the rest of it. Nothing to do with Think Green or Save the World or anything like that. It's just all about there's not enough power, you know, from the from the provider. Crazy when you think about it. But yeah, it's strange that for the last year we haven't really had much of a problem. So yeah, I've got my backup things in place and all the rest of it. That's probably why you're getting solar panel ads. All you guys have no idea what it's like to have your power knocked off from time to time. And then you end up putting all these power systems in. It's almost like they got us to put all these power systems in, and now they give us the power back like, oh, you didn't need that after all. But I'm sure it'll come back. I'm sure it'll come back. I was actually expecting it to come back now in winter, and it actually didn't. I was actually quite surprised that it didn't. But as I say, that's why I'm so surprised by this particular trade fundamentally, that the South African Rand is holding up so strong. It just doesn't make any sense to my brain whatsoever, because I live in it and I can see it, and it's crazy. Okay, Shane, on the gold 1 hour chart, there's a nice, I think we might be heading around 333. Let me just have a look at gold. You see, my whole point today was to show you how to find a high probability setup. So if I was going to look at gold and I was looking for a high probability setup, what would I be looking for? I mean, at a glance, I can see that it is in an overall bullish phase on the 4 hour chart. We're looking at the 4 hour. Now, you don't need to go to the day chart like we used to, like we do. Like, you know, if you really want to take your time and go through the trades, particularly on the weekend, go to the day, go to the weekly, and see which way it's going, what it's doing, and how it's acting. Draw in the resistance, draw in the support, see where you are. But we don't need to do that if we're having a quick look and we're looking for a high probability trade. We're just looking for a trade to see what we're doing. And for me, I look at a trade and I look at it and I say, okay, this is gold. Now, what actually happened was we went long and it broke to the upside. It broke past the prior high and it went up. Okay, so this is now all changed. The whole situation on gold has now changed after it hit target last night and came down. And my target was like 1 millimeter away from that, by the way. So it was like really on point. Now, we can take that line, move it up, and say, well, that's now the high. Okay, so we're looking at that. That is a level, and that will be a resistance up there. There'll be levels there. If you want to draw them in, you'll find they're pretty close to that high. And then this has now come down. So I'm looking for a high probability trade. What am I looking for? So this is short at the moment. But what you've got to be careful of is we drew that trend support in, and that trend support is running right across here. And there's a demand of money lying right here, which is pretty much a support. So when you're looking at your high probability trade, the first thing you've got to take into consideration is if I was to take this trade short right now on the 4 hour chart, then I'm not talking about 5 minutes, 1 minute, or any of those. Okay, that would be a completely different trade on a completely different basis on the amount of loss you can take, or the amount of money you can win, or the amount of distance you've got for stop loss, risk to reward. But the first thing I can see when I look at this trade without doing anything, is my risk to reward is not good if I take a short here. Because at the moment, my reward is in all likelihood, in all high probability, down here at the 3,300, as you guys mentioned, but actually 33, more like 33.40, maybe even 33.45, rather than 3,300. That's where the level is, sort of around the 33.40. Now, if you look at that, your risk is up here at 34.40, which is quite far away. So for a short trade, I'm not happy on this trade. So what I'm looking at is, you know what? This has been going up for a long time. And if I look at this, it's been going up for a long time. I mean, I can make it all the way back here. Look at that, all the way up, down, all the way up. It's been bullish for quite a while. I mean, this is a bullish trade. End of story. Everything says the trend is to the upside. So what's your high probability? Is your high probability short or long? I'm sure you can all answer that question. Your high probability is to the long side, because gold has been long for a really long time, and it hasn't broken structure over time. So what you want to do is, rather than take the short trade here and on the 4 hour, if you want to do it on the 5 minute, and that's a different ballgame, like I say. But on this particular time frame, if you want to take a short trade here, you're going against the flow, which means it is no longer a high probability trade. In fact, probably a low probability trade. You're actually pushing against the tide rather than swimming with the tide. So what you want to do is you want to wait and you be patient and let the trade come to you. Let the trade come into you and say, all right, let it hit these levels. let it give us a green candle to the upside, give us a long trade, and it's giving us a long trade to the upside. If you want a short trade on this, on gold, right now, if you wanted a short trade here, what I would say is I would rather wait for it to either break the first trend support here, but even then I still wouldn't be comfortable. What I would like to see it do is get past that low, or even that low, below that pink or purple box. Let it get below that purple box, giving you a signal that it is now starting to go short. Other than that, wait for the green candle to jump, go back up, and send us back up towards this level. Another great long trade would be if it breaks through that level, gives us a breakout, and heads to the upside, because then it's going past the prior highs, it's breaking through the resistance. And that's how you look for your trades. That's how you look at your high probability trades. You can't just say, oh, I'm going short because everything's going short in the short term here, and then expect it to work out on a 4-hour chart. You see, if you go back and you're going to sniper entries and you start going down to 5-minute charts and you find that the trade is short, if you're trading on the 5-minute chart, then you must trade on the 5-minute chart and stay there. Don't take an entry on the 5-minute chart and then come back to the 4-hour and expect it to work out, especially if you're trading against the trend. Trading with the trend, it might work out. But if you're trading against the trend, there's an all high likelihood that it's going to go against you. So what you want to do with a trade like this is actually wait for it to play out in your favor. What I did earlier was I was in the long trade. I got out still in a reasonable profit and let it carry on down. If it goes all the way down to this level, I'll buy back into this trade. So, I mean, you're looking for high probability. If you go to Brent crude oil, why haven't I traded back into Brent crude oil yet? Well, you see, I've drawn these fancy lines in here, obviously. And my whole point is, what am I waiting for on Brent crude oil? I'm waiting for a long trade. Why am I waiting for a long trade on Brent crude oil? Now, my reasoning is different on this to gold. Why is my high probability on Brent a long trade when you've had this huge short move, and you've also had a huge short move if you take it all the way back when you've had this downward trend and it's sort of hit here and it's starting to go back up? Well, this is because experience tells me that oil always trades between 65 and 120. And while that's not, something that you can hang your hat on, it is something that you can go back on the charts and look way back and you'll see that it's pretty much there and thereabouts. Now, there has been a few times with black swan events where it's gone down to almost zero. And there's been a few of those dips. I mean, those are events in the world that you can do nothing about. But if everything remains as it should and everything remains normal in the markets, then effectively 65 is a really cheap price for oil. So my fundamental reason for looking at oil as a long trade rather than a short trade is my opinion that it's oversold. I look at it as it's oversold. It really has gone to a level where in the past, because commodities are cyclical now, I don't know if you remember me telling you this, on many an occasion, commodities are cyclical. They go up and they go down. They go up and they go down like a wave, like a sine wave. So unlike a share or an index or a Forex trade, if a commodity is at the bottom of its level, then generally you can look at the supermarket mentality and say, well, it's actually quite cheap because it's a commodity and commodities do that. They go down, they go up, they go down, they go up. So that's why I'm looking at a high probability of a long trade on Brent crude oil, because I'm fundamentally looking at it and saying it should actually at some stage or another start to head back up into the long area. I just want to look here at your comments, guys, if there's anything. Yeah, the trouble with backup generators, Kevin, or backup solar panels, or now these days we put lithium battery systems into our houses, which can run the house and stuff like that, and they can run on solar panels, etc., and take over the power. They're quite expensive. But now you get all this backup and you put it in, and all these companies have startups and they start selling that stuff and they're doing really well. And then for a year now, we haven't had a power failure. So those companies are now struggling because people have got power. So they're not really going to buy more power, are they? So it becomes a bit of a nightmare that. Wait until it either breaks a trend line and goes, sit in your hands. Yes, good afternoon, everyone. Have your Rampart, good to see you. Good to see you again. Laka, Futures, Brazil. Morning, everyone from Florida. Welcome from Florida. Florida. Oh, what a beautiful place. Yeah. Hi, Brazil. Rob, what's your thoughts on grid trading? No thoughts. No thoughts. It's just another system. No. Don't worry. You can do it, but if you want to use that system, use it. I don't think I've ever traded on it, to be fair. But yeah, that's probably one of the things that I haven't done. There's a few. I'm sure there's a few. But yeah, it's a bit like this ORB strategy. You know, it's kind of an insane thing. Yeah, no. I don't know. Everybody's going on about that now. ORB strategy, open range breakout is the word I'm looking for. You know, I mentioned it on Tuesday as well. That's going all over the internet at the moment. Everybody's carrying on about it. It doesn't work, actually. And actually, you might as well do exactly what we're doing here. Same thing, you know, only orb's worse. It's like totally worse. What that is on the opening candle, if it breaks past the prior high, that you go long. If it goes past the prior low, it goes short on the 15-minute. And the trouble with that is what normally happens when the market opens, it goes one direction and then shoots back the other way. And it doesn't really give you a positive run. I think I looked at it and you get about a 20 or 30% success rate with that. It's really bad. Gold is burning diesel like crazy. Keep the lights. GP. Go. It's burning diesel like crazy to keep the lights on. Yeah, I actually think they are burning diesel like crazy to keep the lights on. Yeah, it's a very low probability system. I haven't really, you know, I haven't traded with any type of grid system or anything like that, so no thoughts on it. Oh, what's Tom's comment on that, Shane? Let me know. Tell me about it. Tell me about it. I'd like to hear what he has to say about that strategy. But he works out his own strategies, so you know, he does use things like that, I suppose. But yeah. So where was I? Brent crude oil. So the whole purpose of my Brent crude oil, of me wanting to go long on Brent crude oil is more fundamental than actually technical. So how do I find high probability trades? You know, things like these types of trades intrigue me. For example, I mentioned the VIX on Tuesday to someone, or last week, or whatever the case, and there was one comment where somebody was asking me, you know, where should I get in? And that type of trade as well is very simple. If you have access to that kind of trade, which you'll only get on cash accounts, just by the way, not on these funded accounts and things like that. But that kind of trade is more like a long-term patience thing, sit in your hands. You're going to sit in drawdown for a while. It's an expensive trade to hold, but it's so worth it. If you can purchase a VIX trade, you're taking such a good trade. Because what I normally would do is purchase it below 15, hold it. It'll spike to 30 or 25. It's going to make an absolute fortune, and then you can get out of it. But you've got to have funds in your account to hold it, because you could hold it for a quite long time. You know, in the worst case scenario, if you have a really good year, it could sit for 6-7 months before you get a spike. So just be very careful of trading things like that. Understand when you get into them, the high probability is you're waiting for that spike, because it will always occur. There is always a spike. It's always going to happen. So in some cases, you're waiting for the high probability on a chart. And in some cases, you're waiting for the high probability because of a fundamental reason that you understand. When I talk about fundamentals, I'm not talking about the general every week jobs figures or the general CPI and all this type of stuff, the economy and that sort of thing. I'm not talking about that. I'm talking about actual fundamentals in the market, things that actually happen, things that you've seen happen in the past, things that you know are going to affect the markets. For example, if you know there's geopolitics coming and people are starting to get upset with each other, you don't want to be sitting in trades over the weekend. You don't want to be holding those trades. If you know that a bank might just go bankrupt like the Lehman Brothers, you're crazy to be sitting in any trades long, because there's a good chance that everything's going to come tumbling down, because everything's connected at the end of the day. Or if there's if they turn around tomorrow night and say, we're going to deregulate, we're going to regulate Bitcoin and we're going to take it off the markets and we're going to take it over, or whatever the case, you wouldn't want to be sitting in a crypto trade, but then you also wouldn't want to be sitting in anything else, because if crypto goes down, everything else goes with it. You've got to be very careful of these things. Keep that in mind when you're watching trades. Keep that sort of scenario at the top of your mind. That's what I talk about when I'm talking about fundamentals. The underlying news, not the news on top. The cream on top is worthless to you. It's not going to help you. It's just going to move markets in the short term. People are going to get excited. People are going to say things. People are going to be, yeah, this happened. But if you've got to look at it over a bigger picture, always look at the wider picture when you're looking at things, when you're trading on slower time frames like 4 hour and daily and that sort of thing. But if you're trading on the 5 minutes, then you only want to be trading on the charts. You don't want to be trading on anything else. Only the charts is what you're worried about. If you start worrying about everything else, then it's too quick. It's not going to have any effect. But what I would recommend, what I would say, I don't recommend anything. What I would do, what I did when I was trading on the 5 minute and 1 minute charts in the old days, is I would always look at what the direction of any one product is on the higher time frames. So I would say, let's see, what is the US 500 doing? What's the S&P 500 doing? Oh, it's bullish in general. So then what I would do on my 5 minute trades is say, I know that on the day, the weekly, and the 4 hour, and the hour, that the S&P is bullish. So on the 5 minute, I'm only going to take bullish trades. And that's how I succeeded on lower time frame trading. Even then, it was tricky, but that's what I did. Unless, of course, it was overbought, oversold, or something like that. That would be a different type of scenario. But if it was just trending, then I would look at what the trend is doing on the higher time frame, and then on my lower time frames, I would only take trades in that direction. Also, if I'm trading on 5 minute, 1 minute charts, for those of you who do that, which is, I think, only Shane, I would also only trade with a few products, maybe 3, 4, 5 products, because if you've got as many as this on your chart, you're going to have a problem. You're going to get confused as to trying to take the trades quickly. You can look for trades that are going to work out for you. They don't have to be the same ones every day. Like I know some people that only trade the NASDAQ, the S&P 500, and the DAX, for example. But you can't really do that on a daily basis. You do have to change it up a little bit and move things around. So, I would say see what's working on the day and then trade on that for the day. But it is very difficult to trade like 20, 30, 40 different products on a 5 minute chart and then keep up with it. It does become slightly difficult. But as I say, I'm not a big fan of trading on the lower time frames. As far as I'm concerned, most new traders will lose, and they'll probably lose their pants, and it'll ruin their lives. So I prefer to say to people, look, I've been through it, I've done it, I've been there, done that, and sold the t-shirt because I got bored and I went and I started trading those lower time frames. And I was fortunate enough not to lose my pants there, but you will most likely. And it's actually, we all levitate and migrate towards higher time frames, and we all levitate towards protecting the account. It's becoming competent in the market, and your first point of order is to keep the account safe, not to lose the account. And that takes a few years to get around your head is that the most important thing is to preserve the account, which means you start looking at strategy, you start looking at the stop loss, and then you start working your trades around that scenario. So many people get into trading and they actually don't do that. Okay, Nick, how's it? Nick, RB system is worse than the 0.2% breakout or breakdown from yesterday's close. Hold until 2:30 p.m. Yeah. Yeah. No, Nick, it's pretty much. Look, at the end of the day, what you've got is a system which, yeah, if you go with the orb, similar to anything, yeah, if you have a system in the market, they're all 50-50, but some are worse than 50-50. What Nick is saying here, like, for example, you mentioned the turtle system, like my video that I brought out the other day. And in that video, I specifically said to everyone, don't get excited about the system, because the system is actually useless. It's a 20-30% system. I mean, you're not going to have a win rate. And just because it's a breakout system doesn't make it insanely good. So yeah, don't get excited about the system. What they did was they had the strategy, which we use. The strategy is the only thing that's going to make you money in the markets at the end of the day. And actually, that's what I was trying to say is, most systems in the market work. Every system in the market actually works. But some are just better than others. There's probably systems out there that will give you a really good edge in the market. And then there's others that, like that, will just give you a 20 or 30% rate. The big issue here is it's a drawing a line in the sand. The whole point is to manage the trade and to manage the account and to manage the risk and preserve the account, whichever way you take the trade. Somebody mentioned to me the other day that on one of the comments that they now use our strategy and our system and they love the videos, but the only thing they've changed is they don't use this particular system. When they want to take a trade, they toss a coin and they decide which way they're going to go. I tell you what, it actually makes no difference. But you do need, I kind of feel that you do need the charts to draw a line in the sand. I mean, you need this so you can say, where's my stop loss going to be? Where's the levels? And, is it going to go past that high? What's going to happen? Is it bullish? Is it bearish? It kind of helps you to take your trade. It helps you to know where you are with any one given trade. And this is one of the things that I find important about the charts. The charts give you that sense of security that you're going in the right direction, that you know what you're doing, and you know where your stop loss is. And it's really difficult to manage a trade if you've only got this on the right, you only got the numbers. I mean, it's difficult to actually just take a trade based on a number and then work out a risk and a stop loss and a take profit and so on. Whereas if you've got some charts, it just makes it easier for you to work it out. No matter what your system, if you're using the turtle system or if you're using the orb system or if you're using price action or MACD or whatever the case, or as Shane mentioned now, a grid system, it really doesn't matter. But what I do say is, don't get caught in the never-ending cycle of doom with these systems. Pick a system, run with it, work with it, evolve the systems around yourself. So take a little bit out of everyone's system, like I said before, and make a system that works for you and work with that system. That's your line in the sand, and that's how you take your trades. Once you've figured out how to do that, then stick with that system. You can evolve the system, you can improve the system, you can change it over time. It doesn't have to stay exactly the same. You can find shortcuts and ways to work with it and all the rest of it that'll work for you, but try and stay with a system that's working for you. Not necessarily, I mean, as I say, lines don't have a predictive capability. They're not crystal balls. They can't tell you where the market's going. All they can do is give you that line in the sand. So There's no point in digging around in the market and looking for that golden nugget that's going to make you money. It doesn't exist. Never existed. Guess what? It never will. Your best bet is to pick a system and work with it. And then use the strategy that works for you. The strategy that we talk about on a regular basis with managing the risk, setting your profit levels, following it up, the amount of risk you risk on your account, making bigger wins and losing less, and all these types of little things. Now, they don't always work out. Best laid plans of mice and men. For example, my gold trade last night, which I wasn't watching, and that can sometimes happen where it misses by a millimeter on the take profit, and then it comes back, and then you make less profit than you wanted because you weren't there. That's going to happen, and you just have to factor that into your trading and accept it. There's nothing you can do about that. But your ultimate plan is to try and make more money on your wins and lose less money on your losses. I mean, let's be fair. I mean, that's the plan, and you want to stick to the plan. By the way, I hope you're all liking the video. Come on, guys, if you're watching, give it a like. Give it a good like. A good like is always good for the videos. Okay, so what are we targeting? Kevin, yes, you're in a trade now, showing up in profit. Nice screenshot. I put it on 0.2 toggles, 300 in my final way. Good change. Continue down. Okay, so you want to trade in gold, I presume. Yeah. I think overall gold will get to the levels that you're looking for, Shane. If you're trading on the short term, so you're looking for it to get down to these levels. I presume 33.40 on gold. Looks like it's going to come all the way down to that level now. Don't see it going much further unless it goes all the way down to this low here. Then maybe it'll hit that and bounce back up. But yeah, if it stays in its bullish trend, then it's going to stay above these levels. So 33.40 is about the level. Okay. Yeah, the 4 hour is kind of, yeah, that's where it's going. Then we got DAX. DAX is coming down, bit of a downward trajectory. Now, you're looking for a high probability trade, you might look here again. But, often when people talk about a demand level, people say you need 3 green candles. But if you look at this trade and you look at those 2 green candles there, the first one is extremely long. So I would give this a good demand level. So there might be some money lying here right on this level, which would give you an indication. Where's the wee rectangle? Would give you an indication that you could pick up some money on the DAX here and go long and that level. Otherwise, it's going to come all the way down to the next level, which is a little bit further down. So yeah, you got kind of 2 levels here, because this one's got the 3 candles, but that one's got a very long shot in here. And I would look at the first level because you're in trend. You're on a trend support right here. I would expect that it'll probably hit here and bounce back up. So DAX, I would say long trade from this nice little sort of support level over there. That doesn't look too bad, actually. That actually looks quite reasonable. I wouldn't go short on that, not just at the moment. Just want to see if the Brent crude oil is breaking to the upside yet. Not yet. I'm waiting for it to break to the upside. That might be quite a decent trade. I'm actually quite happy with the DAX there, Shane. I'm actually quite happy with the DAX. There is a bit of a range here. You see that I've drawn that range in quite nicely. So you've got this range that it's in, but it's at the top of the range right now. But it's also in this long-term bullish phase. And I mean, I can pull this back. It's been in this phase for quite a while. So my overall tendency on the DAX is to the upside. And the markets are kind of pushing to the upside, particularly the S&P 500 and whatnot. So I'm looking at it with eyes of it might take that money and actually start shooting up. But to be cautious on a longer, you could wait for it to break past the high and then take the money up here. That's also a pretty good trade. On the flip side, if it breaks past these lows, that could be problematic for the DAX as well. But it's kind of faked out a couple of times as far as these lows go. So I'd be very careful of that on the DAX. So yeah, be scared on that. But as far as, for example, you've got the S&P 500, it's moving up strong bullish. And it really is just shooting on up. And if this goes up, and it does break to the upside again, then I expect the DAX, in all probability, will most likely follow. Using MT5 at the moment. Yeah, I've been using MT5 for years and years and years. And so sick of MT5, to be fair. But my cash account only has MT5, so I have to deal with that. That's how it is. I don't know why they don't go to trading view. It's so much better. The object of a trade entry for me is to reduce the stop loss and reduce the chance of hitting the stop loss. So the whole point is, when you've been trading for quite a while, I don't know how long you've been in the game, Nick, but for me, it's always been, it's not about profit so much as, obviously, we want to make money. We're traders. We make money on everything. As far as traders, people ask you, why you're doing things. I do it to make money, clearly. But with trading, I don't look at the profit first. I look at the risk first, the risk factors, and I preserve my account, because I've learned over the years that if you don't, you end up losing it, and that's quite expensive. So you'll make the profit if you preserve the account and manage the risk and lose as little as possible. At the end of the day, you want to lose as little as possible, so you want to get out of the losing trades as early as possible. It's actually a flip of the mindset. You've got to flip your mindset around, because what actually happens, and this is the strange thing about human beings, I don't know if you've noticed it, but the strange thing about human beings is what we tend to do is when we go into a loss, for example, now you're in a loss here, what we tend to do in a situation like this is not when it's going positive now, because that is actually a good buy, but what we would tend to do now is dollar cost average it. We'd tend to go, I'm going to add more to this trade so that I can get back to cost a lot quicker, right? That's how most people think. And then when you do get back to cost, let's say it works out. Let's say it all works out for you and you don't get nailed and it goes back to cost. Not one trader turns around and says, oh, I made a profit of $150 that I was in a loss. I made a profit back. Every trader goes, ooh, phew, I made it back to zero, relief trade. I'm out of here. I'm good. Nobody talks about any profits or anything like that. But on the flip side, if we go to a profit and we say, ooh, we're in a profit here, okay, and you move the stop loss up to cost, you happily move the stop loss up to cost, and it comes back and it takes your stop loss out at cost, so zero again, just like on the other side. Every single one of you will say, I lost $131. Every single one of you will say, I lost $131. But you didn't. You were in profit, but all you did was lose the profit, but you haven't lost anything. In fact, it's the same as when you were in a loss and you got back to zero, and you were in a profit and you went back to zero. It's exactly the same thing. So you don't say I made a profit when you were in a loss, but you somehow say you made a loss when you were in profit. The trade's not over till it's over, but particularly most of you will say that when you're in a loss. You'll actually hold on to a loss for dear life for the simple reason that the trades, you don't want to close the trade, because if you close the trade, then you forever will have to show that loss. Imagine you'll have to show that loss if you close the trade. That's the issue. If you're in drawdown, just accept it, get out, take the loss, try and make a profit next time around. Take the losses. You know, it's an amazing thing how people will hold on to a trade for dear life simply because they don't want to show that loss, because they don't want to put it out there for themselves. I mean, you don't want your account to be showing a loss now, do you? You just have to live with it. You go into loss, take the loss, walk away, next trade. Okay, that's how it goes. You go into positive. That's when you should be getting the mindset switch around of, oh, now I should be adding to my trade. Now I should be dollar cost averaging. Now I should be putting more in. Now I should be following my trade up. Now I should be getting excited because I'm in a profit. I shouldn't be going, ooh, I need to get out of this now because I'm in a profit. That's the mistake we make. Our mindsets are completely back to front and the wrong way around. Yeah, how's it, David? Ooh, good to see you again. See, we're all back here. There's quite a few of us back here now. And don't forget to put the likes on the channel, guys. Add some likes. I hope you guys are watching the other videos that come out for you guys. Don't forget, I don't know how many of you guys are actually members here, but I do put the members video out every single day. And it's got a trade on it, and a trade of the day, and what's happening in the markets. Give that a watch as well, you know? But a slow week, no, that's, I know how that feels, David. Actually, guys, on Monday morning, I have to do that as well, take the wife to hospital, so bit of an op there, so we might be a bit late with a few things. But at least with as if you're a trader and a full-time trader, you can do these things. If you were working for a company, you wouldn't be able to, would you? The difficult part for me through most of my days working for myself was the buck stops here, and you can't leave things lying around, and you have to stay in control of them. So, sometimes you just can't leave things. But trading, you can. Trading, you can put a position in place, you can leave it, let it trade, unless you're a 5-minute trader. So, your wife got the bug as well, Shane. I don't think my wife would ever get the bug for trading, but my son got the bug. He does a lot of other things, but he actually trades. I think I mentioned on Tuesday, actually came and announced to me that he actually owns Bitcoin because he knows how I feel about Bitcoin. Yeah. Crazy, eh? Bitcoin. Yeah. I'm in the mood to do something with this cryptocurrency, but it's just at that level where you see here again, if you're looking for high probability trades, you're looking to take a high probability trade. The high probability on Bitcoin at the moment is long. Even though it looks overbought, it's long because it's been bullish for such a long time. It's been going up, and every time it goes along, it goes up, goes along, it goes up. So the high probability is to the upside. What I would do here is just wait for the breakout and then take a long trade further. Looks great. But yeah, where's the Ethereum? Everyone was raving about Ethereum, and it was like flying up, and now it's just sort of hit this level here. So what I would say is just give it a bit of life to breathe. Let it breathe a little bit, and let's see if it can break the prior high and go up, or if it can give us a decent level to go up with. There is also this level here, but it's come in here and it's taken this money a couple of times, and it hasn't bounced out nicely. It's starting to turn and go out, but I think it's kind of pushed away from this trend support quite far. and it's left that gap. So I think it might need to just, get a little bit closer to this again, maybe relax off a little bit. Things will start to play into the favor, and start looking at a trade there. Yeah. So silver somehow nailed me yesterday. Okay. Why am I back on gold here? Yeah, Bitcoin. Okay. Let's have a look at what we got here. Okay, back on Bitcoin. There we go. I must say one thing about trading viewers, it's not a bad trading package, I gotta say. It's always been pretty reasonable in comparison to MT5, for example. But I've used so many different trading platforms in my days, and effectively they're all the same. And you just have to get used to how they work, and just work with them. It's as simple as that, really. They're not complicated. Just some have got more features than others as they get newer, and I just found that MT5 has fallen behind the post a little bit, and also they're constantly trying to sell you the MQ5, MQL5 little add-ons and apps and things like that, which are pretty annoying. There are some nice free ones and things like that, but you don't need that stuff. Just keep the charts clean, keep it simple, don't get involved in all that stuff. But I like the ability to work out my risk before I trade, and you can't do that on MQL5. So on that account, I've basically got a spreadsheet which tells me exactly how much I must trade on every single trade. Work out, because I don't know if you guys have noticed, but particularly on the cash accounts, you get different levels on Forex, and different levels on this and different levels on that. You can take a different amount of contracts for certain risk. You have to like work it out. So I got little formulas worked out there and all kinds of things. Why is ZOR generally getting stronger against the US dollar? Very strange. Grandpa, that's what I've been saying all along. It just doesn't make any sense to me whatsoever. That entire trade, as I've said to you guys, I took this entire trade based on the fundamental reason that my opinion is this rand should be getting weaker. And I presume it's because of the dollar more than anything else that this is happening. But still, the rand should be like really getting weaker. It shouldn't be getting stronger. I don't know what the good news is that's keeping it up, why it's staying strong. I mean, the country's almost bankrupt, yet we're holding on here. But yeah, that's why I say, people ask me, how do you look for high probability trades? And this is one of the ways I would look for it. Fundamentally, I don't believe much in or have much faith in the rand. So fundamentally, I'm trading against it. But it's trading against me. So, and the market can hold out much longer than you or I ever will be able to. So you have to accept sometimes that you're wrong. And in this case, I might be wrong. I might be wrong, and there might be something out there that I don't know, or something that has changed, which is affecting everything. And that's happened to me on more than one occasion in my trading career, where you look at something and you think it must be, it should be, it has to be. You get married to the trade, and then you find out somewhere down the line that you were just wrong. Nothing you can do about it. The market's 50-50, and that's what it's going to do. We all have our beliefs, and this is the other thing, is someone out there believes the opposite to me, and believes that the rand is good enough to work against the dollar, because otherwise there wouldn't be a market and you wouldn't have this movement, obviously. So some big money out there believes in the rand. I don't know who that big money is or why they would, but somebody does, and they seem to be quite excited about the rand. So yeah, and it's holding up, and it's holding up pretty well. Yeah, not good for our trade, but that's how it is. Let's just have a look at what gold's doing now. And there you go, showing your trade's working out quite well. The last level was about there, so now it's broken down. I just want to see what it happens when it hits this 33.40. Is it going to turn around and bounce back up again, or is it going to continue on to the downside? Should be interesting to see what's going to happen there. Shane's making money today, so Shane's buying the beer today. Ruben, thanks for being here, and I'll see you soon. Hopefully I'll see you on Tuesday for the Tuesday live show. And take care. Yeah, have a good one. Join us for that Tuesday live show again. Yeah, taking a high probability trade. I know a lot of people have asked me that question. Interesting, actually. And then how do you choose the right resistance area? That's another big thing that some of the guys have forgotten how we used to look for our trades. And I'm just going to show you guys quickly to remember that we should still, if you're looking at trades, especially over the period of a week, it's still a good idea just to go back to your day chart. This is a day chart. And just pick your levels off the day chart. Just put it on a line chart to give you levels so you can see the levels there. You see that green line? It's on perfectly on those levels. You don't have to draw rectangles in if you don't want to. It's not a big deal. And if you want to put a support in, you can put the support in as well. I did put it in there. And it actually should be there. There you go. And there's your range for gold. It's sitting in that range. Nicely sitting in that range. Now you've drawn that off the day chart, and it's so easy to then go back to the 4-hour chart and see what you've got there. Now you can actually clearly see the range that it's trading in, sitting nicely in that range. You can buy it at the bottom, sell it at the top, buy it at the bottom, sell it at the top. So what Shane will be looking for now is for this to get to the bottom. You hope so. But within that range, you've got these trends, and you've got to keep an eye on those trends. And then you can just take it back to the candles, because the candles tell you which way things are going. It just helps. That's how you look for your levels, by the way. Don't forget how we look for our levels. And the best way to do that is to just go up a level, get the levels, and then you know where your levels are. So now we clearly know that's the upper level, and that's the lower level, and we know where we stand with this trade, and we can just put these in-between levels in if you want to. I mean, I work with the RSI exactly the same way I work with price as well. If I was to work with the relative strength index and put it in here, I would simply put these trend lines in to give me an idea of where I am. So if you guys are working with, say, an RSI, I'm just going to put one in here quickly. Okay, let's say this is your RSI. Now, overbought implies that it's gone past the 70. Oversold implies that it's gone past the 30 at the bottom. And what I would normally do to determine my levels, and this has clearly now gone short and broken to the short side, and the whole reason for that is I would draw a trend line on my RSI through there. And then you can clearly see that it's broken through that trend line and it's gone short now. Thus, Rob got out of his long trade while still in a profit, because clearly there's a breakdown. But I got out because of a level here that I could see clearly. I don't need the RSI to show me that. But for those of you who want to use it or want it on your chart, it's actually a very nice tool to have. In fact, many of the old pro traders still use only the RSI and nothing else. You know, they'll sell when it's overbought. Yeah, and they'll buy when it's oversold, and that's as simple as they get. But just remember, look on the left here. A product can remain overbought or oversold for an extended period of time, and you could end up in some serious drawdown in situations like this. So do keep an eye on that. Which is why if I did use the RSI, I would use the trend lines on the RSI, just to give me indications as to which way things are going. So for example, there, draw that across there, you can see you would have gone long. And that's how you use the RSI. with your trading. Pretty straightforward, eh? Everything's easy with Rob. Nothing's complicated. We don't have to wait for the moon to turn into green cheese and move 3 degrees to the left before we can take a trade. It's actually using the lines or the systems is actually one of the easiest things in the world. There's loads of systems that you can use. Like I say, never-ending cycle of doom. But you don't have to get complicated about them. That's the easy part of trading. The easiest part of trading is these charts. The charts make it easy. What makes it difficult is managing it and the fear and the psychology and being able to follow the strategy properly. Follow your rules. Now, when I say rules, remember, doesn't mean you have to follow the rules to the exact T. We don't have to be OCD about it. What it means is generally try and follow a rule-based system. You know, keep to your strategy as far as you can. And what the main rule and the only rule that I find is unbreakable is don't lose more than your assigned risk. In other words, if you decide on a stop loss, you decide on a risk amount, don't move the stop loss away. Don't dollar cost average it. Don't make your risk more than it was in the first place. Try as best as you can to keep that in one place. That's the most important thing. Try and keep that and stick to it. If it takes out your stop loss, close your eyes, look away, and let it take out your stop loss, okay? Just let it go. Or if you can and you see it's not working out too well for you and you don't believe in the trade anymore, just get out of it. And also use your common sense. For example, this gold trade, I'll use that as an example again. I'm sure I'm boring you guys with this, but you know, you come in, you see that's happened, you come in, you look at the trade. Now, your first reaction is to hold on to the trade because that's the right reaction. You think, I should be holding on to this trade because it probably will go in my favor, but it's going down. It's going against you. You're still sitting in a profit. You look at the trade for what it is. Use your common sense as well. You know, look at it and say, you know what, this has turned against me now. Let's take the profit we've got and get out. And then you don't lose anything. In fact, you win instead of losing. And if you were losing, you'd lose a minimal amount. And then let it run. And then when it's in your favor again, look for a new trade and get back in. And that's the best. Use your logic. Use your common sense as well. It doesn't mean, oh no, it didn't hit my target, so I'll just sit here and wait for it to go to doomsday. You know, no, you don't have to do that. You can also use your common sense as well and say, well, you know, I wasn't looking, it missed it, and this is what's happening now. So the picture's now changed. The picture's changed. It actually hit the target you wanted it to. It never took your profit because it just missed it. And then you've got a completely new picture to look at, and you've got to take into consideration that it's now changed. And you got to work with that. Say, okay, you didn't make the target because you missed it somehow, but at least you didn't lose anything and you actually made a profit. And that didn't mean that you clicked out early or anything to that effect. What it actually means is you saw a change in the market, you had to change and you had to think ahead and move things around a bit, move the furniture around a bit to suit your trade. Okay, boom, boom. So Shane says, actually, ICT has a few good ideas, but it's not original. I can't take that guy. I look at imbalance or why he calls it FEG, but that's only thing I use. You see, Blue Mango, when you talk about, like, for example, their fair value gaps and their imbalances and that sort of thing, it's exactly the same as us going and just saying there's a level or there's a level in our price action, and if it breaks above that you buy, and if it breaks below that you sell. What they've done is basically put a set of rules in place for their complicated trading system because they overcomplicated it some insanely, and they're working according to that. And every single trading system is effectively a line in the sand. It's a 50-50, whether you toss a coin or whether you have ICT, complicated green cheese, blah, blah, whatever. mishmash of stuff, and you know how to trade it, and you trade with it, and all the rest of it. And I looked into those fair value gaps and things like that. Pretty much, I mean, it'll work. It'll work if you just follow the process, and, you know, similar to anything else, you'll get a 50-50 trade out of it. It'll either go the other way or it won't. And it's just a way of drawing a line in the sand. And I guess they figured that out somewhere down the line. But the difference is, the trouble with those guys is they don't promote to you that you should have a strategy with it. They kind of promote to you that the lines are going to make you the money, that the lines are going to give you a win rate. And that is wrong. The lines don't have a predictive capability, and the lines cannot make you the money. And that's where they go wrong. Where they go wrong is they promote that these lines are going to make you money, and they don't. So that's where it goes wrong, you know. So you believe, you go on a course and you pay these guys and you get involved with them and all the rest of it, and you believe that you're going to go home and these lines are somehow going to make you into a millionaire or profit for you or whatever the case. And they can't. They just can't. And yes, they do overcomplicate trading. Yes, the Nicholas FX2 Okay, sorry, I don't know how to pronounce your name there. There's been a lot of controversy around the ICT guy. If one wants to overcomplicate the trading, ACT is a place to go. So, yeah, totally overcomplicating their trading. Dr. David Paul would say that your trade where most people, I lost that, where most people would put their stop loss. Actually, he's not the only one who said that. There's been a few guys who said that to me in my career. Trade where you would normally put your stop loss, but that applies to not what we do. That applies to the normal person or the normal trader in the market. So the normal trader in the market will put a stop loss in a place which is far too close, and it'll be in an area where it's going to come down and get taken out. I put my stop losses in a safe area, and then I work out my trade back from there. So yeah, I wouldn't take my long trade from here. As far as I'm concerned, this is far enough away from the level, and I don't see anybody coming down to fetch this immediately or in a hurry. So I'm quite comfortable with my stop loss being down here below the prior low. But what most people would do is put their stop loss up here at the 62.85 on that low. And there, yeah, I would agree with him. You know, take your trade from there, because that's probably where it's going to come and get taken out. So yeah, I know about that. And he's not the only one who said. Many people have said that. Take your trade from where you saw you wanted to put your stop loss. But if you do that now, if you do that on this trade, I mean, we took this trade a good few days ago, and we wouldn't be taking a trade on this, would we? Because by the time we blink our eyes, this thing is going to go to 6,600, take our profit, and then we would never have got in on the trade, because look at that. Not one candle has come down here towards my stop loss. So I hear what he's saying, but I understand why he said it. And a few guys said that to me earlier in my career as well. Many years ago, Rob, when you're putting your stop loss there, okay, you know what? That's where you need to take your trade from. And then you work out, well, hang on, what I really need to do is put my stop loss in a safe place. That's all. Once you put your stop loss in a safe place, you'll be okay. Look, there's nothing coming down here right now. Okay. ICT is the same as SMC. Support resistance trades that don't diddle in the middle traders are currently very popular with day traders. Yeah, look, we trade the price action, we trade the support and resistance, we trade the trend. As I've said to you before, I trade three ways. We trade three ways. And that's it. Keep it simple. You know, it is popular because it really doesn't matter which way you trade in the market. It's a strategy that's going to make you the money. And all the system is going to do is give you the line in the sand. But yeah, support and resistance, supply and demand, it's the easiest way to trade if you keep it simple. You know, and like I say, the three-way trading that I use, which is trend, counter trend, and range, That's all you need. You don't need much more than that. And you can throw in a bit of supply and demand and all that type of stuff if you want. I know Shane likes the Fibonacci. Use it. It's okay. You're looking for a high probability trade. You're going to take that high probability trade and you're going to say, well, here's my trade. Now I can manage it. And then all you're going to do is manage the trade from that point. That's all you're going to do. Nothing else. It's actually crazy to think that the chart's somehow going to make you a profit. Support resistance, supply demand's bad. Yep, 100% agree with you, Rob. Justin. Don't diddle in the middle. Don't diddle in the middle. I like that saying, don't diddle in the middle. But yeah, it really doesn't matter if you do. If you toss a coin and take a trade, it's either going to go for you and it's going to go against you. What I would do if I was going to diddle in the middle, okay, is I would look at the overall picture, like I've been telling you guys earlier. Look at the overall picture, just like I would as if I was day trading the 5-minute charts. I'd look at the overall picture and say, well, that's pretty bullish, so I think I'll just go long, and that's it. Then you can diddle in the middle. You just go with the trend. It's fine. That people overcomplicate it far too much and start to worry and have sayings and ICT, fair value gap, rubbish, blah, blah, blah. It's a whole lot of rubbish, and it really doesn't matter. When I started trading, we only had these lines. We didn't have anything else. We didn't have computers for one. It was a dream to get computers. We had nothing else. We just had the lines. We also didn't have leverage. We just traded with our own money. But yeah, we didn't have all these fancy systems and all that. That actually knocked me back a little bit in my career because I was used to trading a certain way. And then all these computers came out and all these fancy systems came out. And then they started dragging you off into this overcomplicated world of trend lines, not trend lines, of moving averages and all that kind of thing. I mean, my first fancy indicator that I got to use was the moving average. I mean, I thought, wow, this is insane. A moving average that corrects itself and works itself out and all the rest of it. That was my first introduction into fancy indicators, lagging indicator is what it is. Didn't I already move my stop loss on this? No, I didn't. Why didn't I move my stop loss on this? Shouldn't I? So yeah, should I? I can actually take my stop loss on this and move it up. Just put it there. There you go. But now we can lose $1. Hopefully we don't lose $1 now. Okay, all right. Do you wait for whether it's still go for take profit or stop loss? Do you wait for whether it's still go for take? Madhu, I don't quite understand your question. Could you just enlighten me a little bit on the question? Because do you wait for whether it's still go for take profit or stop loss? I'm not quite sure. Just maybe rewrite it. I would move your stop loss on S&P 500 because now your stop loss is far from validation area. Boom, 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 boom. Yep, the stop loss is far from the invalidation area, but when you think about it now, I've moved my stop loss all the way up to here. Boom, where is it? Somewhere there. Okay. So there really isn't a stop loss anymore. It's zero. If I look at my S&P 500 now. So I just moved the stop loss up because Shane mentioned move the stop loss up, and I thought that's actually a good idea. Okay, so I would normally wait for about $150. Now I'm like $1.76 in the red. I could actually move that up to there, okay? And why not? Then it's a profit, right? And what you actually end up now is with a situation where you can't lose any money, and it is below that trend line there. So if it breaks below that trend line, in all likelihood, it's probably going against us anyway. So if it stays above that trend line, we should be okay. And if it stays above that trend line, it should stay above our stop loss. So what I'm doing here is risking the profit. I'm actually risking the profit with a view to it going further. That's okay. You know, that's sometimes you just got to do that. Sometimes you just got to do that. Are you new to trading? Okay, I just need him to wait for whether it's still go. Okay. I'm just not sure of the question, so I don't know how to answer it. So I'd love to answer your question, but I need to kind of understand it a little bit. Okay. But yeah, so the basis of this now is very simple. So the basis of this now is the stop loss is in profit, but it is not in an invalidation area anymore. But if it does go below that trend line, then it is kind of invalid. So I'm looking at it as, okay, I'm risking the profit on an invalidation below that trend line with the possibility of it going further. But I need a lot more profit than that. I mean, I want it to go all the way up to the top here. But if it does come back and take that out, then I'll live with it, and then I'll just get into the trade again because it is quite far away anyway. So yeah, that's okay. We'll live with that one. It's a bit like the gold, you know, you're kind of like it comes back, takes you out. Live with that one. I'll wait for the next trade, and hopefully we can get back in again somewhere down here, and that'll be fine. But at least it's not a loss, so it's effectively profit. Now all we need is for the rand to weaken some more so that we can get something going on this trade as well. Start going for us rather than against us. Euro United States dollar is still holding up, actually. Now this is no longer relevant, so I'm just going to remove that and just put the trend down this way in the short term. Just see what we got here. Still holding up quite nicely. If it breaks to the upside, it's even stronger, which means it's going to go all the way up to here. But I actually let that one go already, so okay. Cool. Great stuff, man. Great stuff. I think a lot of guys, new traders, maybe don't want to sometimes say if they're new to trading, you know, but everyone starts somewhere. Everyone starts in the beginning. Everyone gets going, and everybody makes these things happen. You know, I've been trading for 33 years, but I've only been doing YouTube properly for about a year and a half to 2 years. So, I mean, I had a few attempts at putting the odd video out here and there on stuff, but never really took note of it. So yeah, when somebody asks me, you know, my thoughts on YouTube or how to do it or whatnot, I'm tell them straight, I'm pretty new to it, you know. So, you know, I can't really give great advice on it. So you understand, everyone has to start somewhere with everything. So with trading, everyone starts somewhere and everyone learns the trade. Trading, trade. Note the pun. Everyone learns the trade in trading. Yeah, trading should be called a trade, shouldn't it? But it's a career. It's a career. It's not. You know, trading's not a game. It's not for fun. It's a career. And one of the downsides to trading, which I find, is a lot of guys will get a lot of money. Maybe it's a pension. Maybe it's a retrenchment package. Maybe it's money you've saved all your life. Maybe you sold a business. And then it's all the money you've got in your life, and you throw it into trading after doing a course like an ICT course or something like that. I don't want to name them, but and you end up in a really bad situation, and you do end up ruining your life. Bringing a video out about that, and it can be difficult because let's say that all you've got in your life is, I don't know, it could be $1 million, could be $100,000. Let's say it's $100,000. I'm just using that as a round figure. Let's say all the money you've got in the world is $100,000, and you put it in the market and you lose it. What's plan B? What happens next? Do you go and live on the street, or what happens next? That's something you really got to think about when you're getting into trading, and particularly if you're getting into trading with your last amounts of money. So these days I've really warmed up to the prop firms and funded accounts. I mean, I was always adverse to them. I always thought, this is a lot of rubbish. And only this year did I actually warm up to them and realize, hang on, they can serve a purpose. And that purpose is teaching you how to work with the money. I think that is useful in the sense of, if you do a demo, every trade you take is kind of meaningless. It doesn't really make much difference. But if you have a funded account that you've paid for, and you're looking to take a profit share off that account or succeed or whatever the case, then it has some meaning to you. And you can learn to trade from that. And then if you trade with that, and let's say you do start taking reasonable profit off it, and you're getting the profit share and it's good enough for you, then you don't even have to use that hard-earned cash and put it into the market. You can actually, for example, just carry on doing that. But if you decide, look, I'm pretty good at this now, I want to try and use my hard-earned cash because I know what I'm doing now, it gives you that sort of stopgap, whereas you're not just risking the cash immediately. And then at least you know what you're doing and you know what to expect. Just also bear in mind that when you do start using that hard-earned cash, that also changes, particularly when it's your only money, your only lifeline, and that if you lose it, you're in trouble. Your psychology steps up a little bit, even from funded accounts. But so from funded accounts, you can only lose that amount, that set amount, and that's it. But with real cash in out of your bank account in there, that is serious. That's the buck stops here. So it lifts the fear factor quite a lot. So keep that in mind. The fear factor does go up. But I have found that these funded accounts are useful for that stopgap in between. I'm actually I'm not so adverse to them anymore, let's put it that way. And I actually do have, I think, 3 links in the description for these funded accounts for anyone who wants one. So, my reasoning behind it is it's a good stopgap so that you don't risk your last earnings or your last amount of money in the market and make a mess of it and lose out. Because the trouble is, you go on the course and these guys on the course teach you that these lines are going to make you money. They're somehow going to predict the market, that charts somehow predict the future, and you're going to, and they show you how they can take $1,000 and turn it into $100,000. It's easy to show you something like that. And on the short-term time frames as well. And then the new trader goes home and he gets his little chart out and he starts trading and he puts all his money in there. And once you've lost that money, there's no way back, eh? There's no way back. So, yeah, I like the idea of having the funded account as a stopgap. I really do. It's. I know that there was a big hoo-ha around them, scandal and what have you, and I know a lot of people were talking about it and what have you in the past. But I think it does give every trader that a responsibility to learn to trade, which is a little bit better than demo. And if you do start making money on it, then it becomes risky, and it's even better. And you're making money off it, and you want to make that money off it, and you want to make that profit and take it home. So yeah, I actually prefer doing that than just taking the whole. Let's say, like I said, let's say it's your last $100,000, and you take it and throw it all at the markets, and when you look again, it's gone. What I would do is rather take that money and invest it, or put it in shares, set and forget, whatever, or invest it somewhere, or make sure you've got it safe, And then the only money you can lose is the money from the funded accounts. And then once you've learned how to trade, like I say, once you've learned how to make a living from it, once you've learned that you can make a living from it, then you can start pushing your luck a little bit, trying to make more from it. Okay. Then Maru asked, during your trading, do you wait until either the trade, the take profit, or stop loss is hit, or do you exit the trade early when it starts going against you? So yes, now that, Maru, is exactly what I was talking about earlier, where, for example, you may not have seen, but we were in a long trade on gold. And here, for example, it almost hit my take profit, and then it came down when I wasn't looking. I was out of time zone. I was asleep. When I woke up, the red lines were in. But it was still at a level where I could get out of the trade and take a lesser profit than the take profit and accept it. Sometimes you've got to use your logic when you are taking profit. A good example would be, let's say we are here in the S&P. Let's say our stop loss is still down there, and this is not reached. It's starting to turn around and come back, and all you do is say, all right, that's my take profit. Now, normally what I would do if it starts reaching the take profit is move the stop loss right up behind it, and then push the take profit away and try and make as much money as possible. But in the event that I'm going to take profit earlier, it'll be because this price breaks down, breaks through this trend, breaks away from that, or whatever other indicator you want to put in place that you're working with. It breaks through that, and then it's told me that it's actually now becoming a short trade because it's counter trending. Then I look at that and I say, well, then I must get out of the trade, and I might end up getting out of the trade from much lesser profit. And that I'll accept. I will accept that. Even though my strategy wants me to make more on my wins and lose less on my losses, I want to take minimal losses. In other words, I'm not going to sit here and close my eyes and watch it take a whole big loss for no reason whatsoever. I'm going to try and take the smallest losses as possible, which includes sometimes having to take a smaller profit because the trade has changed and it's gone against me. When the trade changes, when the trade is no longer valid, then you have to look at it and say, lose your common sense and say, well, this is no longer reaching the target that I expect. It's turning around. It's breaking down to the other side. I need to get out of this trade. And then you walk away. You make less profit. But that doesn't mean, oh, you failed dismally. It just means you've used your common sense and you've taken a lesser loss. In other words, you've made a smaller win, right? Same as if it goes down into a loss. And you see, listen, this is definitely going to go and hit my stop loss at $250. Let me just take it down to the rand here, where it is in a loss at the moment. And then you see this turn down, and you see it's heading down, and you say, this is most certainly, it's broken through that level. It's definitely going to hit my stop loss. Rather than waiting for the $250 loss, why do that? Get out at 200, get out at 180, walk away. Take the smallest possible loss you can. The reason I held on to this, even though it broke down, is because fundamentally I believe it's going to go the other way. But if it is breaking down and it's doing bad, you can get out early. There's absolutely nothing wrong with that. So you don't have to religiously sit and wait for it to hit take profit or hit stop loss. You don't have to do that. What you do when you put your stop loss in place and when you put your take profit in place, it's a sort of plus minus, it'll be that area, okay? The stop loss, the big thing with the stop loss is you don't want it to run further than the stop loss. If it hits your stop loss, it's gone, because when you chose that stop loss, you chose it for a reason. Why did you choose the stop loss? Why did you put it in place? I put it in place because I can see it's below the prior low. There's a big gap here. There's lots of space. I'm comfortable with my stop loss being there. And if the price hits that area, in my opinion, this trade is no longer useful to me. This trade can go in the bin. Now I know that. So if the trade hits that, why would I move it away? Why would I try and make the trade bigger? Because I already decided that if the trade hits that price, the trade is rubbish. So that's my stop loss. Hits that area, it's gone. So that's the one thing you don't do with a stop loss, is move it away. But I can get out earlier if I believe in my mind that the trade is already failing and it's already rubbish, and I don't feel that it's got any chance of doing well. Then I can get out earlier than the $250. And the same goes for if it's heading for target, and I just feel like it's broken down, it's broken away from its structure, and the structure's changing, then I can obviously, like I said earlier, get out earlier if I need to. But my ultimate goal is to reach the targets. My ultimate goal is to reach the targets and make more on the wins and lose less on the losses. That's the ultimate goal at the end of the day. So that's what you want to do. Doesn't mean you will do it. It doesn't mean you will be able to do it. And it doesn't mean that it will always work out for you. But you can try. And that's the important part, is to try your best to get to that point where it's actually going to make you that money. I hope that answers your question. You see, trading is alive and it's very subjective. People tend to think of it as very objective, but it's not. You know, an algorithm, people who trade with algorithms are trading with a very objective system. In fact, Nick here mentioned the turtle traders earlier, and the turtle traders were a very objective system. What he did was he took 13 or 14 traders. Well, they weren't traders. They were people who knew nothing about the markets, in fact. And he put them down there and he gave them a specific set of rules to follow. And they followed those specific set of rules to the T, like robots. Objective trading. But that objective trading only gave them a 20 to 30% win rate. But they didn't need much else because they had a strategy to follow, and that worked for them. At the end of the day, objective trading doesn't work. You have to be subjective with your trading. Your strategy has to be objective with your managing your risk and your stop loss and making more on your wins. But it can be subjective as to how you control it and how you manage it and how you follow your wins and how you get out early and that sort of thing. So you don't have to be objective with that. Also, things like lines, trend lines, resistance lines, support lines, these get moved on a regular basis because it moves around. For example, this green line was over here, or where was it? Yeah, somewhere here, like, okay. And that was the trade. But that all turned around. We got out of the trade at that point, and that's all turned around now. Now that line is up here. It's further up. It's in a different area now. Now your range is wider, and it's alive. The market's alive. You know, you don't leave lines in place for a month, a year, or whatever. You move them around. So that's very subjective. People tend to think of the markets as so objective, but they're actually so subjective because they change on such a regular basis, because somebody says something happens in the world. You know, these are things that will affect your charts, that will affect your trading, that will affect the market overall at the end of the day. So hopefully that answers your question 200% rather than 100%, and it gives you everything that you need to know. But yeah, that's how we trade. And it's, you know, a lot of guys like to be very complicated. I actually tried, you know, having YouTube videos, I have to obviously look at what other guys are doing and what you guys would like to hear and what you would like to see. So I had a look at one or two other trading people's videos, and I found that in many cases, it's so complicated and so way out there that I can't figure out what they're talking about. I don't understand what they're saying. I'm looking at them and thinking, wow, what are you actually trying to say here? I got no idea sometimes. So I'm actually quite surprised that some guys can actually figure out when they watch a lot of these YouTube videos what people are trying to tell them to do with the trading systems and what have you, because some of them are so complicated. I mean, we talk about, like Shane talked about it earlier, Dr. David Paul, the late Dr. David Paul, many years ago, he used to promote the Wyckoff system. And I don't know if any of you guys have tried trading with the Wyckoff system, but it's supposed to be simple, but it's actually really, really confusing. And it's complicated. It's complicated. You don't, and to trade with that it just feels insane. You don't really want to get involved with it. It's too much. It's like too much work almost. Leave it alone. Leave it alone. So yeah, even a guy like that who was very successful and had a lot of good things in the market to say and to help people and what have you, his system was just too complicated. The Wyckoff system is too complicated. A lot of guys have very, very overcomplicated systems, and I say to you, try and keep it simple. So like when I say to you, look at all the traders and see what systems are out there, what information you can put together for yourself. Put all the information together, but don't overcomplicate it. Don't make it so that you have to, do 100 things before you can even take a trade. I've seen some traders' charts with 4 million lines on here and a whole bunch of indicators and whatnot. You can't even see the candles behind all the lines, but somehow they're taking a trade, and there's a whole process to this. And I try and follow the process, and I think, no, what are you talking about? Yeah, but I think it's got a lot to do with many traders that have only started recently. Because I started so many years ago, I didn't have all these overcomplicated systems to start with. So things were very basic for us back then. And suddenly now there's all these different things. So guys that come into the market in the last 10, 15, maybe even 20 years, they come into the market with all this fancy stuff, and they don't understand what basics are. Go back to basics, start on the basics, and build your way up. And if you want to throw a few things in along the way, you can. Of course you can. You can evolve your own system to work for you. But make sure it's a system that you're comfortable with. It's going to work for you. Yeah, Blue Mango, like you say, you find Wyckoff has a lot of room to be subjective. I think really just about every trading system on the planet is subjective. These systems are not really that objective, but yes, Wyckoff is insanely subjective. And the reason for that is that's what makes it so complicated, because you're never quite sure. You see, when you look at Wyckoff for what it is, and the little things they draw you a little chart pattern there, and they say when it does this, do that. When it does this, do that. When it bounces off there, do that. When it springs there, do that. And it all looks good. Maybe if you're on a course for it or something, it looks great. And then when you come to the real charts, you try and find Wyckoff on there, okay? And you're going to be like looking for it here. It's insane. When you're at the end of a chart like this and you're looking for something like that, you're not going to know what it's going to do next. So it's really difficult to work with something like that. So I find it much simpler just to draw a line in the sand, support and resistance, trend, counter trend, range, prior high. Just work with that, and then you'll be fine. And you'll work through it, and you'll figure out a way around that to make money for yourself. Don't overcomplicate it. It's crazy. There's just no point to it. What you need to remember is the 3-step business plan that I give you guys all the time, which is manage the risk, make more on the wins if you can, and try and take as little loss as possible. It's the coin toss information that I give you. If I toss a coin 10 times, it'll land on heads 5 times, it'll land on tails 5 times. If I give you 2 for every heads, like 1 for every tails, everyone will choose heads because the odds are in your favor. That's how you trade. You trade with try and put the odds in your favor. Try and make more on the wins, lose less on the losses. And then you'll make money. Somewhere down the line, there'll be a profit. It's as simple as it gets. You don't have to overcomplicate it. The difficult part is it sounds easy. It sounds easy. Of course, if I say it, it sounds incredibly easy, doesn't it? No, well, that's easy. I'll just make more on my wins. But what actually happens is, especially if you start day trading and you start 5-minute trading and then you start losing, and then it starts becoming complicated. It starts becoming difficult to get that money back, and it starts sucking on your income. And no, you've got to be careful of sticking to a plan. It's very difficult to stick to our strategy on lower time frames with the stop losses and things like that. It's very difficult. Most scalpers will do their utmost to not lose a trade. So you'll win 7 trades in a row, and the 8th trade goes into a loss. You'll do everything in your power not to get out of that loss. You'll hold on to that loss because you don't want to lose that 8th trade because it's going to affect the other 7 trades that you just won. And like I said earlier, human beings have this psychology of not wanting to trade out of the trade, because if you trade out of the trade, then suddenly you have to print that loss. Because when you're in the loss, you just see it as drawdown. You aren't losing anything until you take the loss. No, you're actually in a loss. You're taking the loss. You are taking that loss. I mean, if you look at this now, okay, so there's only 2 trades left open on here. One's in a profit, one's in a loss. So that drawdown is a real loss, and that profit is a real profit. That's why it only shows 23 up there. Otherwise, it would show that only and not that. This is a real loss. If you click out of this now, you lose that. So this is why I say people don't see drawdown as a real loss, and they hold on to their losses for dear life, when what you should be doing is holding on to your wins for dear life and getting rid of the losses as quickly as you possibly can. Look, in this case, I'm not going to exactly dump that now, am I? Because it's going long, and that's what I expect it to do. But yeah, this is one of the big problems in the market, is people holding on to those losses and not accepting that you're going to take some losses, and then holding on to the losses for dear life because you don't want to let go of them. Because if you let go of it, then suddenly you have to show that loss, and that's just terrible, isn't it? So yeah, that is one of the complicated things that you're going to have to deal with in the markets on a regular basis. Now, I keep opening up this German DAX because I'm interested in seeing what's going to happen here with this little move here, because it looks like it's come back into this level, and it's just hitting that trend support, and it looks like it might, if it breaks through, then there's a good chance that it will actually go the other way. Because one of my concerns, of course, is the S&P 500. Because I'm waiting to see what's going to happen here as well, because I want this to obviously break to the upside and go up. And that'll be interesting to see as well. So, okay, guys, I hope that's been a really interesting afternoon for you guys. Well, it's afternoon here. It might be morning somewhere else. Might be nighttime somewhere else. Not sure. But I hope I've given you guys some relatively interesting and good information. And we'll come back with some more next week. I don't want to guarantee you a live show on Tuesday because I am taking the wife to hospital next week. But I hope we'll be able to do it. It'll be okay. Thursday will be a definite. So it's just a thing that has to be done. But okay, let's hope we do get it, and everything will be okay, and I'll be available, and we can do it. And then I probably won't be doing much trading for myself on the Monday, but we'll see what happens and we'll see how we go. But guys, it's been fun again. It's been absolutely excellent having you guys here. Once again, it's nice having you guys on board. It gives me something to do, and it also creates a nice community, and it's great chatting to you guys. Obviously, it's fantastic. I love it to bits. But guys, I want to thank you for being here. I want you to have a fantastic, profitable rest of the week. Enjoy your weekend, because, I mean, then tomorrow's Friday and then it's weekend, isn't it? And come back and watch the videos. There's a good video coming out on Friday. And I think Friday's one is about how you could ruin your life if you lose all your money trading, especially for the new traders. I think it's important that you guys actually perhaps watch that. Guys, thanks for watching. Keep your feet in the ground, reach for the sky, and I'll catch you guys soon.